Well, the one thing I can tell you is late August is a very bad time to trade. You see this market up and down, up and down, up and down. This is high frequency trading at its worst. Um, Now, we did have a negative jobs report. 10 o'clock, we have another general sentiment report, so we may be looking at a short. I will show you what happened early in the morning. Um, Back here, I haven't taken a trade yet. I just did a sim broker trade. I did one of these and I missed this upturn thinking it was just going to bounce off the moving average. But it's very frustrating because with this kind of up and down movement, you've kind of got no chance of doing anything. Now, the signals work, but they're not strong enough to give you an indication of what's going on. This bounced off the pivot point and was a small divergence. Um, Came down here, it looked like it was going back up again, and when you get in a situation like this, it's just best to sit and wait. Now, I hope most of you have taken advantage of Norm Hallett's basic trading discipline course. It will really help you a lot. Even though we missed a bunch of points in here, from here was a 4-point run, it just looked very dicey with the ergodic here. Everything was just pretty much very flat. So what you want to do is, here's a possibility of a nice turnaround, but it's right around the low of yesterday, and that report is coming out in about 7 minutes. So I'm going to put this on hold and watch what happens and let you know if I take a trade here. The big thing is there's a very low volume and the market itself is not going very far. One thing I did want to do, this is a daily chart. You can see we've also been bouncing up and down, not going very far, not doing very much. And the daily charts are also very indecisive. We have a couple of these big down days. You'll see a crawl up and a huge dump. Crawl up, another dump. Same thing here. So you've got to be cautious of this. This looks like the short-term ergodic is turning over on the daily chart, and that we may have another down day. This is the third day it's tried to poke above that 49 EMA. So I just look at this. Before we've talked about looking at the timing, looking at the longer-term charts, and we get this kind of action, which is very indecisive. I just don't like to trade on these days, and I'm going to have to go for the phone call. Now, here is an interesting thing that happened. We reached a low, we bounced off the midpoint of the first support, but there was a report coming out on government sentiment on the economy at about 10 o'clock, and this is one of the reasons I tell you always be prepared ahead of time. Now, it's about 9, let's see what time it is, 9:57. And if you think that, remember, there's no such thing as insider information in the futures market. Watch what happened. I got a phone call from my friend Jack right at this point, so I missed his trade. But here we go. Market goes up a little bit. Midpoint of the first support starts down, and it is now still 9:57 39 seconds. Watch this. Still there. It's 9:58 and a half. 9:59. Boom. Guys get the report early. Now, this is a huge market drop. First support went right, blew right through it, blew right down here for a little profit taking. People, if they got in at the right time at 84 and went to 75, they picked up 5 points, 100% return in about 2 minutes. Sits here for a little while doing the profit taking. Finally bounces up because so many people are getting out, and then watch this. Here's a second one. And talk about high frequency trading. Here was 79 and a quarter. Here was 77 and a quarter. So every 2 points, people are popping money out of the market. Just thought you would be interested.